where more than half of gold investors have actually raised their hand up and said, hey, I've invested in Bitcoin. So I think that the key takeaways for me are where he actually explained the actual issue around governments printing money. It's in fact a broken monetary system, right? There is a way to address that if governments have done their homework properly and worry about creating enough of an economy to enable that GDP growth without the need or the bad habit of printing money to satisfy the needs of today. I think that where he explained this doom loop analogy, I think that's the first important point, and hence where he made a mention of the big print, which is imminent. And also at some stage, and it makes total sense, as governments keep on printing money and borrowing debt, whether it's through bonds or through other means, there's going to come to a point where the governments can't reduce their large enough debt. I mean, take the example of the United States. It currently has a whopping $37 trillion debt. But of course, you can easily extrapolate this same issue over debt with other countries out there. It's the same issue that all governments face. So this doom loop is really applicable to any nation, state and government today. So they're going to be continuing to kick the can along the road. At some stage, the governments won't be able to continue to do what they're doing. So this monetary reset will happen at some point. It may be painful, which is all the more reason why we need to take the reins of control of our assets at an individual level. I think that's the key bottom line message that I think he was on about, and why we should turn to hard assets in order to part some of our wealth rather than storing them as cash in bank accounts and savings accounts, where, as I said, when the governments print money, they're in effect stealing our wealth, stealing our hard-earned cash to satisfy the needs of today. And as a result, that leads to currency debasement, currency devaluation, the GDP growth will diminish. Are all arguments why we should certainly take the reins of control of our finances and wealth at an individual level. And we should certainly turn into harder assets than cash, certainly harder assets than any other cryptos assets out there, even commodities that are easily reproducible, even gold. In fact, if you compare gold with Bitcoin, gold has, I think, around a 2% annual production supply, so that every year they in effect create 2% of extra supply of gold, whereas with Bitcoin at the moment, given its recent halving to date, it's around just under 1%. So in fact, it's double as hard if you compare it to gold, and that says a lot. So investors out there, they should certainly look for those hard assets, but they shouldn't kind of turn a blind eye over Bitcoin, because we're seeing humongous upon humongous rate of adoption, and investors should move away from 0% allocation to Bitcoin to maybe 1, 2, 5 or even 10% of allocation into Bitcoin. Of course, in line with what they're willing to lose, hold its allocation to Bitcoin into the long term, because it's certainly not a speculative asset. It's not something you can day trade. My recommendation, minimum 10 years. That's how certainly I'm doing it. And I'm currently seeing 150% gain. And that's taking account of the volatility that's happened since then. As with any other financial instrument out there, or even commodity, which is Bitcoin, is a digital commodity. People call it digital gold, right? Which I also agree with. So really do the homework and research, and certainly take his advice on reading Safety and Amos, the Bitcoin standard book. And in fact, where people may say one of the reasons why they may be wary or hesitant to actually invest into Bitcoin, oh, it's because it's risky, oh, it's because it's too volatile for my needs. I'm sorry, I have to beg to differ on those views. I mean, volatility and risk is akin to any investment asset out there, whether it's in equities or in bonds, or indeed in any other commodities, or even real estate property. They all suffer the same predicament, which is volatility, and of course there's always an element of risk. Bitcoin is no different. You can even subscribe to this channel, where I give extensive explanations and those around Bitcoin and even blockchain technology, because that's another fascination of mine, particularly around the realm of real world assets tokenization. And you can review those videos if you subscribe to my channel. It's going to be really rather interesting times ahead. So if you enjoyed today's episode, please hit the like button, and if you haven't done so, to please subscribe to my channel. As I just mentioned, I post some very interesting videos, anything to do with Bitcoin, blockchain technology, and the future of finance. So until next time,